Good afternoon, finance students. It's your professor here, and I'd like to give you an update on a topic we've talked about, and it's again very timely. Who owns the debt of the United States of America? We've talked a little bit about fiscal policy and monetary policy individually, and this video will kind of, I think, bring them together in a way and how they interact. It's also very timely because we know this country has a lot of debt, a lot of treasury debt. We have a lot of debt because we've had a lot of deficits for many decades now. We've talked about that last time. And we know that there's even been a recent discussion about how much debt we are allowed to borrow, in air quotes. And Congress had a say over that as they wrangled over the so-called debt limit, the debt ceiling. So I'm going to share my screen and we're going to do this on the fly as together. We'll do this as a team and see if I can't share my screen. Sure, I've done that successfully. Let me try again. Share my screen. Well, I sure hope it's shared. I think it is. And I'm going to take you to your module for this week, your favorite class. And you will see that there is a new page on your module that I'm going to speak to today. We're into week 4 here. And there is a video update. Who owns the debt of the United States of America? I'm going to drop the video I'm recording right now into this slot. And I have a new document here for you that I'm going to open in just a moment. And I'm really going to try to replicate what I do in. All right, so as a first starting point, we talked about some of these primer pages I've put on your modules weekly, including monetary and fiscal policy. And again, a couple of weeks ago, we talked about the basics of that. Let's take a look at fiscal policy. Fiscal policy, the policy of how much we spend, how much we bring in. And in the case of the US, we spend a lot more than we bring in. So we have to borrow money to fill the gap. And we do that through our Treasury Department, US Treasury. And if I go to their website and hit the data tab, I can get all sorts of fascinating information, including national debt to the penny. Currently $32.3 trillion. And as we know, just a couple of weeks ago now, that was capped at $32 trillion, 31.5 as a matter of fact. And the US government is continuing to now borrow money. That the debt ceiling crisis is passed, at least temporarily. And this is why the numbers have gone up. We also see this is where we're going to get into what we haven't talked about yet. Who owns this stuff? What is intra-government holding relative to debt held by the public? Intra-government holdings, 6.9 trillion, are pieces of this debt that is bought by government agencies like military pension and other employee pensions. So our government basically owns some of its borrowings. So within pension funds and other parts of our own government, $6.9 trillion. The rest is held by the quote unquote public, by other people and entities. So let's try to break that down as a starting point on this document I put together for you, which is really similar to what I would put on the board if you were in class with me. But we know that that number we just talked about, $32.3 trillion, that's our total US debt. That's how much money we owe to somebody. And we have to borrow that money because we need it. We need it to pay our bills like Social Security, Medicare, military, etc. And it's because, again, I know I'm repeating myself, but it's important to get this down in your knowledge base. We run a deficit every year. We don't generate enough income, if you like. We don't bring enough tax revenue in to pay for all our spending. All right, so we just broke this down. Now another step. Intra-government holding and debt held by the public. Okay, so that is a starting point for us to figure out who owns the rest of this stuff. Who owns the rest of this stuff? So what I want to do is take you back to your primer page, fiscal policy primer page, and let's take a look at the so-called Treasury Bulletin. Okay, this is a publication. Monthly, it's issued, and lo and behold, there was one issued very recently, which gives us an incredible amount of detail about who owns what, when does the government borrow money, in what quantities, etc. And it's a very dense and long document, but I'm going to navigate you through it really quickly by referring you to the table of contents. Table of contents, right? So if you quickly look through this, you could probably do this on your own, I bet. But if you got down to the ownership of federal securities, a security is a borrowing, a treasury bill, a treasury note, a treasury bond, the way our US government borrows money. Borrows money from a variety of different people and institutions and promises to repay that money with interest. Okay, so this part of the document summarizes a lot of that good stuff. So if I go down to page 50 or so, and this would be, I'll just keep this real easy for you because you've done this before, ownership of federal securities and a couple of tables, including a really critical table called Table OFS2, estimated ownership of U.S. Treasury securities. Who owns the 31 and now $32 trillion of debt? You'll notice the last data point they have is March. This is a quarterly bulletin. So we're in the rear view mirror a little bit, right around when the debt ceiling was 31.5 trillion. We know to the penny, it's now 32.3 trillion. And I should have pointed it out. That literally is yesterday, right? So it really is a dynamic calculation here. Okay, so I can see that we have the amount of debt broken into Federal Reserve and government holding accounts. All right, it's a little tricky to kind of break that language down. You can look at the footnote, but basically I know what the government account number is of 6.9 trillion. The rest of it is owned by, guess who? Our very own Federal Reserve. Amazingly enough, the U.S. Federal Reserve, this is the confluence of monetary and fiscal policy, where our very own Federal Reserve, our central bank, is buying some of the debt. So were you to subtract what we know the intergovernment holdings to be, which is 6.9 trillion, from that larger number, almost 12.1 trillion, we would get the amount of holdings the Federal Reserve holds. $5.1 trillion the Federal Reserve owns. Okay, and I want to give you another way to triangulate that. And so if we look at, and again, let's go back to our module and our primer page, we can see that the monetary policy primer page has all sorts of amazing information about what our central bank does. And we talked about what they do and why they do it. But one of the things they do is they also buy some of the U.S. Treasury's debt to help our government spend money. All right, so let's go to their basic website, the Fed's website. And if we went to monetary policy and I scroll down a little bit, I could see something called the Federal Reserve's, our central bank's balance sheet, which would detail its assets. If I went to the current release of that, I could see the U.S. Treasury holdings are $5.1 trillion. And I even have some detail as to what types of Treasury holdings the Fed owns. Okay, that number has actually gone down in the last year or so because the Fed has stopped buying U.S. Treasuries in an effort to tame inflation. When they were buying U.S. Treasuries, they're basically putting money out into the system, which creates more money in the system and more demands for goods and services and more inflation. This was part of the issue. They're trying to do the opposite now. But they still own $5.1 trillion of the stuff. So the rest of it must be owned by somebody else. And it's all of us, the U.S. investors and foreign countries and foreign holdings. Okay, so that's a really fascinating discussion here when you think about what you hear oftentimes is U.S. Or foreign governments own a large amount of the U.S. Treasury debt. Well, let's see. You should always kind of challenge these assumptions. All right. So the way to think about that is go back to that same table, this OSF2. All right. So the rest of the debt must be held by U.S. investors like pension funds, state and local governments, mutual funds, and lo and behold, foreign and international. $7.3 trillion of this stuff. All right. So that's one way to think about it. But let's see if we can get a really good basic, and let's go back to our fiscal policy primer page, which is here. Okay, and we know we have the basic Treasury homepage. And if we go to the data tab and we look at the international system, we see something fascinating. We see something really interesting: monthly transactions and monthly holdings of securities, including foreign holdings of U.S. securities. How many Treasury bills, bonds, and notes does, say, China own? You hear this discussion all the time. And if you click through, we get down to the major holdings of U.S. Treasury securities. And we have a neat little table that takes us through this. And I hope this is like, you can see this well enough, of course. But we can see as of April 2023, and again, this is a little bit rear view mirror, but Japan, and these numbers are in billions. So that's $1.1 trillion of our debt held by what is called Japan. Break that down in a second. And then number 2 on the list is China. You may notice the number from China has come down. There are a lot of geopolitical tensions now, between the U.S. and China. This is no accident that China is owning less of our debt, 860, almost $9 billion of it. All right. And then we have other European countries, etc. It's worth noting the U.S. treats Taiwan separately, although it's technically certainly part of China. That's another geopolitical conversation, which we spent a lot of time on. And all these other smaller countries, I think Hong Kong is even on the list, which certainly is part of China, right? So you could argue that if you added all the China plus Taiwan plus Hong Kong, you get a number over $1 trillion, and that's defendable. But let's look at the total, the grand total, 7.6 trillion as of April. That's very, very close to the 7.3 trillion. Again, this is from a couple months ago that we saw on table OFS. But, and people miss this a lot, some subset of that total is what is called foreign official, which means owned by actual foreign governments of, say, China or Japan or Belgium or Peru or wherever. And the rest of it, therefore, must be a foreign holder with a foreign address that's not a government. And that is almost always companies that are based internationally. And guess what? Some of those companies are actually American. We know that many companies, and think about like all the offices that Apple has, all the assets that Microsoft has in foreign countries. Okay, so if we break all that down together, yes, 7.6 trillion of the non-Fed owned piece of the U.S. Treasury debt is foreign, but about half of it is actual foreign governments and half of it is other foreign, mostly foreign companies. Okay, and then we have this piece left over, 12.7 trillion for U.S. investors. Okay, so put all this together in the blender and understand that there's so many things tied up in this U.S. Treasury market: geopolitics, monetary policy, fiscal policy, and interest rates. And if we use CNBC.com as our go-to way to think about that, and we go to the bond market, we can quickly see, maybe I'll do it this way, markets, bonds, the yields or the interest rate the U.S. government has to pay when it borrows money Over time, over decades, it's had to borrow money in these different maturities. And that's how we've accumulated $32 trillion of the debt. And the interest rate the US government has to pay, and look at the 10-year maturity, has been moving up a lot. We know that, right? If you look at sort of even the 5-year chart, once inflation started, think about your assignment this week, it pushed interest rates up all kinds up, including the interest rate the US government has to pay on its very own debt. So that's why this is all intertwined, and I hope useful. I mean, think about this. This looks like just crazy kind of hieroglyphics here, but no matter what you do in your career and where you go, you sure as heck are going to have to be dealing with this market in one way or another. Meaning, it's probably the most important market of any kind in the world because it affects interest rates so much. The more the U.S. government needs to borrow, the more that interest rates are going to go up. There's more supply of the paper, and therefore prices of the paper are going to go down, which means the cost to whoever's producing it is going to go up. Interest rates up as prices of the bond goes down. I'm getting a little technical here, but just think about all the dynamics that have pushed interest rates up. Inflation, the Fed's reaction to inflation, the US government's continued need to borrow. All these things have pushed interest rates higher. Okay, no matter what business you're in, that's probably going to be something that you need to know about. Okay, so this little breakdown, think about it. You could probably replicate this if you go back and watch this video and just use those really basic tools that I just walked you through any time. I know you can do it. So next time you hear that China owns the US, you could say, well, all right, hold on a second. We have $32 trillion of debt. Overall foreign holdings of it is 7 trillion, 7.6. That's not insignificant, but the government's own about 3.8. And as we know, China owns less than 1 trillion and it's been going down. Okay, it's not insignificant. I'm not trying to downplay it, but it's a much lower percentage than you hear around most dinner tables. Okay, so my message to you is always try to check this stuff, always try to go through the numbers on your own. And hopefully I've given you one or two little ways, tools to do that. I'll attempt to stop sharing my screen here. I wish you a good week. Keep it going. We're on midterm of the course here, and everyone's doing just fine. But hit those deliverables. Don't leave points on the table. Give me an excuse to give you points, not the opposite. All right. And let me know if I can answer any questions. Bye.